Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, November 16th, 2021. It is 2:38 p.m. as I'm starting the video, and here's what we're going to cover. Do a brief update on the equity markets. We'll look at mainly focus on the NASDAQ 100 and maybe hit the small caps real quick. And then we'll follow up on some of the recently highlighted trade ideas, including Bitcoin. And I'll do it in this order: Bitcoin, MCHX, AKU, QUBT, so those three individual stocks. Brief update on the cannabis stocks, crude oil, natural gas, soybeans, gold, and silver. All right, so on NASDAQ 100, not a whole lot to update since yesterday. Like I said, it's kind of moving slow since the breakdown, and not the ideal scenario for the wedge overshoot scenario. But whether you want to put any faith into that or not, it doesn't matter. There's our breakdown of our nice and clean primary uptrend line on the 60-minute chart we had recently, and that gave us put the markets on a sell signal. Had a first leg down, and we're basically right back to where the breakdown point was. So by all means, not anything remotely close to a failed trade or a trade that should be stopped out yet, because we're back to entry point. So again, I'm not crazy about the follow through price action. I'm not seeing that point where the selling usually starts to accelerate after a few days. But again, sometimes you go sideways for a while, consolidate, and then the move down. And just want to say I still maintain these targets. Still have the price targets: T1, T2, T3 zone, and T4. Calling the NASDAQ down. And at bare minimum, I still think T1 will be hit. That's why I list multiple targets. Obviously, the first target's going to be my minimum target, the least amount. Anything other than that, then I'm just plain wrong, and it wasn't really a correction, just a little gyration, if you will, in an uptrend. So as of now, I don't see enough in the charts to rein in those shorts or say the sell signal is not going to pan out. Again, it's not perfect price action so far, but here's what I've done. I just want to mention I've added a trend line here. Comes in off this cluster of lows around the early October or early to mid-October, and then comes in recently on all these reactions there. And so that's a level I think needs to be taken out. You still have a downtrend line off the highs that we hit yesterday, and we're slightly above it now. But at this point, again, this is the level that I believe will, if and when taken out, and I think it will be soon, should be the catalyst to the move down towards that first target there around 382.64. Looking at the NASDAQ 100 futures, that would be symbol NQ. Or you can use the micro, I think they're the micro or mini futures, MNQ. You just put the letter M in front, and that gives you the same exact price levels as these NQ, but just a smaller contract, smaller leverage factor in that one. So for those of you that might not want to take a full position in NQ or multiple contracts of that. Alrighty, what I've done, again, this was the primary uptrend line, nice and clean with our sell signal recently. I put it on last week, went down, hit my, had really first, I don't want to call that a first target. In fact, I think I added that line afterwards. This was, I believe at the time, my first target, definitely a target I had there, 932-ish right there, 931 or so, and that was hit. And so again, so far nothing more in my eyes from what I can see is a reaction off the tag of that, the initial tag of that target right there. What it's done, you can look at, again, we're looking at pretty much the same chart as QQQ I just showed you above. Here's that trend line we were at yesterday. We're a hair above it, but this is that pretty much, to me, the last resistance level before the previous high, and we're struggling with that so far. We're right about there. We're 16,308, and it looks like 16. I have it at roughly 16,290. On a 16,300 point index. That's for all intents and purposes, we're on that level right now. And again, there's the trend line that I added that needs to be taken out. If you want to replicate that, actually comes off, same level here, about October 11th to 13th. There's a cluster of lows right there. Pull that trend line up, and right here, there it is. And so you have a few reactions recently, at least 4 distinct reactions. So if and when that breaks, remember we already hit my 15,931 target. So at this point in time, I think we'll come on down, and I'm still again a minimum, what I like to say, minimum preferred swing target, not minimum target, but where I really think this is going and where I plan to hold out, unless stopped out before that, is for a move down to this uptrend line and the 15,536-ish support right there. I think there's some reactions to the left, and that would give us, if hit, something just happened there. Hold on one second. Okay, there's the measuring line I added. Again, if hit, roughly, and again, depending on when we get there, about 4.5–4.6% drop from where we're at right now. And you know, so again, to take it here, you could certainly make an objective case to short on that kickback to resistance. Although at this point, with the price action being kind of you know, not horrible, but not great for the short trade, you might want to wait to see this trend line go. And the thing about it, we're not very far above it. So, you know, you short here, the drop there is what, well under a percent, a fraction of a percent, and you're increasing your odds substantially. So at this point in time, I'd like to, you know, again, I'm speaking to those that might not be short, might want to get short, considering, maybe want to add to, wait for a break of that trend line. Plus, you'll also take out that 16,156-ish support, minor support level right here. All right, so that's the NASDAQ 100 and small caps RTY. We'll just look at the futures for now. Nothing's changed. This was our sell signal last week. Break of the trend line after the divergent high, went down, had a reaction. So far, a little snapback rally. Nothing goes straight down, especially not the indexes. They're always going to zigzag their way up or down in an uptrend or downtrend. So we had a kickback rally. And what I've done with RTY also is added a minor trend line right here. You can see if you zoom in, and we were just looking at a 60-minute or hourly chart on NQ. This happens to be a 2-hour chart. So these are 2-hour candles. So I'll zoom in a little quicker, or a little closer, I should say. And you can see we've been dancing on that trend line, but then that one broke. I may have actually, I think I did. I think I might have updated that in the last update for you, added that trend line there. I know I just added it on NQ today, but and then what do you need to see? So we broke that trend line, but we're not really going down much. Why is that? Well, because the large caps are holding up. You know, it is certainly possible, and sometimes you'll see the small caps falling, but usually not very hard if the large caps are holding up. And so what I think we need to see is obviously a break of the trend line on NQ that I just spent 5 minutes talking about, as well as the recent low here, previous reaction low, and today's low of about 23.83 on RTY. That should open the door for a move down to the first target, or next target, or first one, 23.4168, and then my preferred swing target, just like on NQ, NASDAQ 100, I think will come down and hit that trend line right here, primary uptrend line that comes off the lows back there around September 20th. Okay, and now on to the fun stuff that's making us money, or at least making me money. In the end of the NASDAQ 100, it's not really going anywhere. We're back to where we started with the sell signal last week, so not a loss but not a gain at this point in time. However, BRR Bitcoin playing out nice. That one was highlighted last Thursday. Then I did a follow-up video on Friday confirming the breakdown. That was sell signal to be triggered on an intersecting the uptrend line, which it forms a bearish rising wedge. That was a divergent high right there. On confirming the bearish nature of the wedge, we had a breakdown. If you missed the breakdown, you got a back test of the trend line, and then it's been over 10% drop right to my 58.315 target. And again, as I mentioned in those videos last week, these are actual support levels. You want to set your buy to cover limit order a hair above the level you're targeting. And so I think last week I said if I ever move down at least there, that was my minimum preferred, again, minimum preferred swing target, but I also have a third target right here, and I think it'll be hit. And there's certainly the potential for a lot more. I'll get to the GBTC daily chart in just a second. So that's it. We went down, hit that, had a quick bounce right back up to my first target, 67.99, call that 60,800. Consolidated around there again. We had a little consolidation on the way down, and then that would should take us down. As I mentioned, that was an objective shorting op right here this morning, and still is. We're hardly below it, but we did reverse since I put out that post. And the fact that we've already effectively hit that first target there, I expect little to no reaction. Maybe we get one more, doesn't matter, but once we go through there, and again, I think the odds favor we've already got my initial reaction, so whether we get another one or not, it's the first one that you're likely going to get a bounce. After that, you may or may not. So point being, if you shorted it here today on the kickback, best to just ride out and hold out for a move down to 54,745 is a level, so maybe cover a little bit above 54,750. And again, that's the next target. Now let me go back to the daily chart. I did cover GBTC last week. I know not everybody trades futures, and I also mentioned if you do like futures but BRR is too big of a contract for you, they've got a micro contract for Bitcoin that's MBT is the symbol. M is in micro, BT, Bitcoin, whatever. And for those of you that don't trade futures, you have GBTC, which is the ETF-like proxy for trading Bitcoin. 60-minute chart here, we put in a divergent high, but what I was highlighting last week, busy, I know. We can turn off all the lines real quickly and do this, or at least turn them off on that board and show you, what I mentioned. The case for a short was at least twofold at minimum, if not three or more factors. Number one, this was the previous all-time high. You had a reaction there, check that level, followed by a correction, check that level again. It's about 55.95 or so, and effectively hit it again. So there's a major resistance on Bitcoin. So you have that. And then when you go back to this chart, which I know is busy because we've had a lot of trades. I posted Bitcoin as a short right here. First as a setup, the sell signal come, walk down, hit my third and final target, which case I said cover shorts, if you're still in it. If you took it all the way down to my final target, bounced it long, then even had another short right here, short entries all over. So this one has just been a phenomenal trading vehicle, trading very well to the technicals. That last, when that final target was hit, it reversed from there, ran up, and again, just this is, you can see those previous highs right there. So there's not any guarantee it won't break out, and if it does, and it can hold that breakout, then yeah, that's going to be bullish as long as the breakout doesn't fail. But that's not what I see happening, and it's not what's happened so far. You had another objective short entry there, and Bitcoin's down 7% today. And again, already bounced on the early session before. This guy doesn't trade. I think this is an over-the-counter. It doesn't trade on the pre-market and after-hours session, I don't believe. So that's where you had that futures hit that low, that price target earlier. But you can see on this chart, really, if you use the same levels I've had, I don't see a whole lot of support coming in until about down here, about 41.50 or so. And I measured this out today. I was talking to someone on the phone about Bitcoin, and the corrections that it's had in recent years have measured, when you look at a weekly chart here, that was a smaller one right there, but that was about a 50% drop. I'm just measuring. You can see my pop-up box on the left. That's actually closer to 60% right there. This correction was 70%, and this one was about 90%. So 60, 80, 90, there's almost something there. It's not exactly 70, but you get my point, is that when Bitcoin corrects, you're not talking 3, 4, like I'm looking shallow targets in the stock market. You're talking big moves. So if this was a significant top and not just a pullback, there's a lot more, and that's why I wanted to kind of speak to that, the bigger picture, because I started out on that 60-minute chart just giving you near-term targets. And again, so there's quite possible that if and when my 570, my next target 54,745 is taken out with conviction, ideally after a reaction, if we get one there, a little bounce, maybe bounce back up to 58,315, there may be more downside, and I will certainly update my thoughts on that if and when we get there. But as of now, whether you shorted it here on the back test or here today, good chance if you short it up here, it's a good time to lower stops, because that could be the end of the run. When I say my minimum preferred target, maybe that's it and this thing heads back up now. I don't think so, but again, why not protect profits if you shorted the breakdown or the backtest? Okay, I posted a flurry of individual stock trade ideas in yesterday's video. Almost all of them were longs, or the majority were, but this was a short, and so far so good. Nothing big. I just wanted to update that it's still below the primary trend line. So this is a breakdown, and it wasn't a whipsaw because we had a solid breakdown and we back tested 1, 2, 3 after the day of the breakdown. The next 3 days were back testing, and then we had a pretty good rejection off there. Gap down today. Now the stock is positive right now. We're up 0.7%. It was negative earlier, yeah, I'm sorry, it's down 0.7% right now, and yeah, there it is. So I guess the chart refresh or tick down. So that's what you want to see. I always talk about this, you know, when you're, and I'm going to get to a long trade idea in a second that had a back test to the this in reverse. So what I always say is the problem with shorting a back test or going long on a back test of a breakout, let's say you have a stock and you have a bullish falling wedge and you break out here, then you back test. Well, the problem is you can keep back testing, and anytime you're back testing a downtrend line, each and every day that trend line comes in at lower levels. And there's also no guarantee the back test will hold. You could back test, and all of a sudden fall back below the trend line, and then that sucks. So, you know, look, I will quite often take that back test, but what I like to see, or at least to add to a position or to have maybe a better degree of confidence in the trade, is a rejection. So we did back test 1, 2, 3 days, failed to get through. Now we gap down today. That's usually what will kick off the next trend down, if not just the simple kiss of the back test, which again sometimes it is, and I'll continue to say it's objective to short there, but once you get rejected from the back test like you have today, that's usually what you like to see. There's still a reaction low to be taken out, but I maintain these targets 246, 224. Keep in mind this is a low price stock, so don't get crazy with your position size, but I think there's enough meat on the bone, because if you did short the back test or took it yesterday when I laid it out as a trade idea, it had already, you know, back tested. That's going to give you about 15% profit drop to the first target and about 23% to the second target. So worth it in my opinion. And that's MCHX. AKU is another one I mentioned recently. We hit, I think I might have updated, yeah, I believe I updated that in the video yesterday. And we went on to hit my first target. I just want to say that my first and minimum target has now been hit. That's 210. The breakout was above 183. And so that was good for a quick 14% pop. We went by it, but didn't hold it intraday, so pretty much this is a reaction off the initial tag of that 210 level. It may have more upside. Volume's been decent, but not great. And what I've done since then, today I added this downtrend line. That's a potential downtrend line. We reversed a little shy of it. So, you know, if you took profits, great. Maybe just take the money and run. It is not my favorite setup or trade idea by any means. It was just one I threw out there for you. Nice quick pop. But I think we could probably get one more thrust. I'm seeing momentum in here. It's been strong buying lately. Looks like a day of profit taking. So 230 is still the next target, with a max target of 257, but I'm more apt because you have a potential downtrend line that I think will come into play. So if we get another thrust up, I think we'll probably overshoot the trend line intraday, come close to my 230 target, maybe sell it out a little 228, you know, a couple pennies below 227, a limit order, and then I think we'll finally have a reaction off that trend line, and then later on maybe that trend line will get broken out. But that's my thoughts. So if you're still in this one, you know, you're still profitable, but don't let it go, because that could be the end of the run. Just keep your stops somewhere not too far below today's lows or where we are right now. We're at 199, and if you're going to hold out, and I just gave you where to, I think, take profits. You know, if it comes back in here at 183 to test the breakout, sure, it might provide another objective long entry, but I don't know. I'm going to move on. Just keep in mind, it's a relatively low price one. So a little extra risk there. QUBT, I pointed this one out the other day. Got the trade idea out to you in pre-market, and then right after the market open, it pulled back. It broke out, gapped up above the trend line. So that was a buy signal, breakout. Pulled back, gave you a re-entry right on the trend line. went up. My target was a bit aggressive. Usually I list multiple targets. This one, I'll maintain it. I wouldn't have done it any different, honestly. I can now see in hindsight some minor resistance right around where it failed, but I still think we make it up there. And so I just wanted to do an update. Since I didn't update it yesterday, there was no reason to. After the breakout, we back tested 1, 2, 3, 4. Yesterday was day 4, but here's that example of what I like to see. So again, if you bought the back test on day 1, well, you went a little bit underwater the next day because you back tested the trend line again. At least at the low, you were still profitable at the end of the day, but then look, you went back again. Day 3, second day after the breakout, back tested again. Back tested again, and there's another reason why it's best to use daily closing candlesticks. You had an intraday stop clearing move below the trend line, but yet you parked above it again. So successful back test day 3, and then boom, yesterday you closed right about on it. And now again, this is what I like to see. They ramped it up pretty good today. Nice big green candle on volume. You can see today's volume is tracking above. It's well above average. I mean, that was the biggest volume on the breakout, but today the day still has another hour to go in trading, and I can see that today's volume is well above the average. We've already done volume 1.9 million shares versus an average volume of right here. There's our 90-day average is 680,000, so we're tracking well above, and that's what I like to see. So it's QUBT, still sold target up there. I did the adjustment for you. I have resistance at 953, put the price target at 949, which if it hits it, it'll be good for. From where we're at right now, that would give you about a 34% or so run. Cannabis, well, if you guys recall yesterday's video, I started in pre-market. We had a lot of them following up on the previous day's breakouts and bullish activity, but I made it careful. I was careful to say, and I said it several times, the day isn't just young, it hasn't even begun yet. That was in pre-market. And then sure enough, so these guys were all up big in pre-market. They're pretty nice, nothing huge. But then when the opening bell came, a lot of them, we saw profit taking. However, so look, so pretty much we'll call yesterday a wash. Remember, I highlighted them on Monday. No, on Friday. I'm sorry. I highlighted them on Friday and said, ideally a little more work to be done. So yesterday it wasn't bullish because we had profit taken. So, and I'm not going to call it bearish. It just didn't build on the bullish case yesterday. But today I'm seeing some signs, and I still like the sector. That's why I'm updating. I'm going to stay on this one unless all these breakouts fail. So here's ACB, one of my favorites. And again, it had a very clean breakout above 785 on high volume on Friday right there. That big green candle, nice resistance, even a little inverse head and shoulders bottoming pattern with a nice clean left shoulder right here, head, and then a right shoulder right here. Everything I like to see. And so far today, the back test of the breakout has held. It tested 785, and so it needs to take out yesterday's highs. Pretty much all of them. They need to take out yesterday and or Friday's highs, and that will help add to the bullish case. They're not all up today. This is one of a few, so I'll still have a let's just say I'm still cautiously bullish on the sector. So we'll put a question mark. Need to see a little more follow-up and make sure these weren't just one-day wonders there on Friday when some of them popped. But again, remember, I wasn't just one day's price action. I also laid out the bullish charts, the falling wedges, inverse head and shoulders, other bullish patterns, positive divergences. So I think a pretty decent case was made, and I still like that sector. Moving on, crude oil. Boy, it's a slow rolling crude. Let's see. But you guys know my thoughts where I think it's going. We had, this is CL. These are 2-hour candles, so 120-minute chart. And so we had this positive divergent low back here in mid-August. It led to this rally, this uptrend with a nice clean uptrend line. We had a sell signal, as I highlighted back here. We broke down. We went on back test, giving you another objective entry. And when I extend the trend line, which I just did, we just had a second back test. There's another example. I pointed that out as an objective short entry, the back test, and it was objective again there. Not only was that the second back test of the trend line, it was also the 1, 2, 3, fourth failure at that 84.90-ish resistance right there, followed by, and see this back test, well, that one had an objective or impulsive rejection, but so did this one. And all right, so here it is. It's kind of noise back and forth. Nobody's won yet. I don't consider, this short trade a success at all at this point. It hit the minimum target right there. And yeah, you could have booked profits, but I think it's coming down at least here to 75, 72. And again, I say at least because there's certainly potential for a lot more, even a significant top on crude, I believe. 73.90 would be a potential third target there. And let's just keep it very simple. We hit 78.90. That was believe it was the first target laid out on the CL, the futures chart. Bounced there. We hit it again. That helps to validate that support level. It was minor support right here, resistance here, and then support. And now we've had additional tags. So that's an important level. So bottom line is, I think if we can take out 78.90 with conviction, then that should open the door for probably a relatively quick move down to the 75-72 target and or that 73.90 level right there. Next up, NG, natural gas. Natural gas was, there were several, there's just been a lot going on in this chart. You had our primary uptrend line right there, which was broken here after a little whipsaw, back tested right here. There was our breakdown, back test 1, back test 2. In addition to that, you also had a head and shoulders topping pattern with a left shoulder here, a head right here, and a right shoulder here, and that draws out like this. Left shoulder, head or double head. Some patterns have two heads. Right shoulder, and then do neckline. So we broke the neckline, back tested it, shot above it today, but only briefly, and we ran into the, you can see what I've added here, a downtrend line off the highs. Off the highs of the right shoulder. We overshot that briefly, momentum fueled, and now we're back down to the neckline or a hair below it. So we did put positive divergence, and so that's worth noting. That was a catalyst for this rally, divergent low. It's been these divergences, even these small ones, that usually give you a counter trend rally. Divergent there, positive divergence, rally. And so I still think we're going much lower on NG natural gas, and I still think it's even an objective short right here. At this point, you had that downtrend line, a failure there. Probably if you short it now, you probably want to keep a relatively tight stop above today's highs and then just let it run. And now, of course, remember, and that's another reason we put in that divergent low, which could be the catalyst for more upside. So that's why keep the stops tight at this point in time, I think. Okay, and I pointed out soybeans as a long setup last week, and it went on to break out. You have this downtrend line. We're looking at here on an hourly chart, and that's CS. CS is a symbol for soybeans futures. And you have the positive divergence there on the 60-minute chart. You recently broke out right here, but what you really need to do to get this one going is take out the 1266.5 level right there. That is resistance. In fact, we already hit it again. Recently had a reaction there, right there. You had reactions here, 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 here from above. From below, that is, and then reactions there from above. So if and when that's taken out, I still maintain 312.25 as the next swing target. And for those of you that do not trade the futures, you have SOYB, which is an ETN that tracks soybean prices using soybean futures as well. But you can buy this through your broker, even if you don't have a futures trading agreement or ability there. And then you can see there's that line. See that line I just put there? That's the recent resistance. So we need to pretty much pop. No, here, I'll give you the number. That's it. About, not much. Well, call it 22. Round it up. I have 21.96 there. Call it 22. Pop above 22 should bring us up to 22.73, and quite possibly more. This is one this one's corrected. Remember, commodities are in a bull market. Make no mistake about it. One of their strongest early stage bull market action. I need to keep repeating that because we were coming off a multi-year bear market. and I believe this to be early stage bull market, off the recent lows with more upside to come. And so at some point there'll be a resumption of the uptrend, and that could very well be it. So if you're a long-term trend trader, and you break 22, you might just want to, put some stops in place and periodically raise those stops and let it ride. See if you can take the next leg up in a bull market in soybeans, or you can, swing trade it. And swing trade says, go for these near-term targets. And last but not least, gold and silver. Yesterday you heard me start to cool off and kind of warn of a potential near-term pullback. I'll stay very, try to be very clear and consistent with my words. I'm still intermediate and longer term bullish on gold, but very near term, like I said, the odds for a pullback are quite elevated, especially with the masses all of a sudden jumping on the gold bull train. Too much too fast for me, plus more so technicals. Might say, well, Randy, isn't it good if all these analysts are telling all their clients to buy gold? Yeah, but again, sometimes it's better to be on the other side of a trade, especially early on. But either way, that again was just one thing I want to mention. What drives my decisions much more than that is technicals. Since you had the uptrend line, I gave you a nice clean uptrend line, and it was broken. So if you, as a very active trader, you could have stopped out on the break of this trend line. Gold's come back, and like I said, I wouldn't be surprised to see it come all the way back to 1838, and even to take it out to just kind of wash out stops. Then again, I wouldn't be surprised to see the buyers step in here either. And so that's where, I think, and I said this yesterday, I believe you maybe just want to sit tight right now if you're in a position, and if you had planned to add back, you could add back on weakness or pullbacks to support. Heck, if they ramp it up here and they just shrug off these divergences and that's all we get, the charts indicate we're still going higher, intermediate, longer term. Just near term, I just don't have a lot of visibility. I mean, I like to call the micro squiggles. You guys know that. And all I can tell you is, look, if we come back to or around or even a hair below 1837, 1838, that's an objective level to add on. If we come all the way back to 1809, still objective. And under that, you might want to hold off. I really think any pullback, if we come all the way back down to 1809, we're not talking a big move. It's only another not even 2.5% below where we're at now. It's ideally where I'd like to see the buyers hold that line, the gold, the longs or the bulls, whatever you want to call them. All right, so that's that. So near term, I don't know. Very near term might be a little more downside in gold and silver, maybe not. Silver, I'm looking for the SI silver futures chart for you, and I know I've got it down here somewhere. Bear with me. There we go. Same thing. There's that trend line. I gave you a little minor uptrend line. They took it out. You had a little RSI divergence there recently. Took it out, and look, that took us back to the 24,867 support, which is a pretty good support level. So I'll say this, although I'm kind of gold's a little unclear to me if there's going to be no more downside or not. I'm certainly open to it, but like I said, they may step in and buy, and I can tell you, forget about gold if you want to. Just if you want to look at silver in a vacuum, I do like to factor in where both are headed. This is an objective level. It's 24,867 was a big resistance. It was a target I had here that was hit from all the way back here. We had this bullish falling wedge. We had a breakout, and then we took out the secondary, more powerful uptrend line, hit that level, pulled back, and then we just recently broke above it. So it's objective long here. If it drops, it's still going to be an objective long at 24. I'd really like to see 24 hold. This is probably the most important level, 23,055. I know that's not the recent lows. We had this there, but we had a lot of reactions on there. So that would be my maximum pullback target. I don't think we're going to get that low, but it's certainly possible. I think this and this are objective levels to buy. This one's a bit aggressive because where gold is, but not too much. Enough that I'll throw it out there. If you wanted to get into silver, add to it, take a shot here. Just don't fall in love with it. And again, if it drops, you can continue to scale in down to, but not below 23 in my opinion. All right, let's wrap it up here. Obviously, the metals or the miners will follow the metals. That's almost a given. Sometimes there's a day or two where they're not moving together. For the most part, they are. So my analysis to SIL, SILJ, GDX, GDXJ, those are the gold and silver senior and junior miner ETFs, or any of the individual gold and silver stocks I've covered in recent weeks, that would align with, these levels. So in other words, you can blindfold me, don't show me a chart SIL, and you're going to trade the silver miner stocks. If you get the call and the pullback on silver right, then the miners are going to follow, give or take. Again, don't think of it day to day. I'm talking weeks, the trends over a bigger period of time. The miners have been moving up with the metals lately, just as they were falling when the metals were falling down to that recent divergent low. Okay, that'll be it. Let's wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.